Welcome back to another episode of Crypto Kitty, where we discuss all things crypto and blockchain. In this video, we will touch on price and talk about some historical price movements of Bitcoin. But this is not investment advice. Please do not take this as such. It is only my opinions and for educational purposes. I am not a financial advisor. So please do your own research if you're planning to invest. Welcome back. Now it's time to answer the final question. Is it too late? Is it too late to buy Bitcoin as an investment opportunity? When I talk about Bitcoin to people, there's usually two things that always comes up. One, which we discussed in our previous videos, I can't afford Bitcoin. Well, we already discussed that you don't have to buy one whole Bitcoin. You can buy fractions of a Bitcoin. And the other thing that people always say is, it's too late. It's too late. I've missed the boat on Bitcoin. It's too late for me to make any kind of meaningful returns on any capital invested. So I always tell people, no, I don't think you're too late. No, I don't think you're too late. And there are a number of reasons that I'll give for the reason that I don't believe that you're too late to invest in Bitcoin. The first reason is adoption, meaning the number of people who actually own Bitcoin. Worldwide, there's only about 6 to 7% of the worldwide population that actually owns Bitcoin. When we look at the US, that percentage is a little bit higher, but it's still only 11%. So given the total population, I think it's still pretty early when you're talking about the number of people who actually own Bitcoin. Reason number two is Bitcoin is becoming more and more popular as a store of value, meaning that increasingly Bitcoin is being looked at as a hedge against the dollar. Given our current monetary policy where we're continuing to print more and more money, the fear of inflation and hyperinflation is continuing to grow. And smart money is on the lookout for something to put their money in that is going to hedge the fears of inflation. And Bitcoin is becoming the go-to asset that serves as that hedge against inflation. Further, another reason is when we look across the landscape of people who are buying Bitcoin. Previously, in all the other bull markets that we experienced in Bitcoin, it was mostly driven by retail investors. For the first time, we're starting to see more companies actually dip their feet into the waters of Bitcoin. So more companies are actually starting to buy Bitcoin. And not only big companies and corporations and institutions are starting to buy Bitcoin, but the way that they are introduced into the buying of Bitcoin. So typically, before companies actually start to buy, you start to see their CEOs and CFOs or the executives that are in these companies. They dip their feet into Bitcoin before they get their companies involved. And that's what we're kind of starting to see. So this is called smart money, where you have large companies and high wealth individuals are just now starting to look at Bitcoin as a serious asset class. That phenomenon is only just getting started, and it's only going to continue and increase. All these things only serve to drive more demand for Bitcoin. So knowing that there is a capped supply of Bitcoin and a steady increase in demand for Bitcoin, it would only leave one outcome: for the price of Bitcoin to increase. Being that Bitcoin is a scarce asset, demand is continuing to drive price. The most popular model that's been used to actually chart the scarcity of Bitcoin is the stock to flow model. The stock to flow model evaluates Bitcoin's total available stock, meaning the total amount of Bitcoin available, against the newly produced Bitcoin. In theory, we can project where price will go based off of this stock to flow model. And Bitcoin has followed this stock to flow model pretty closely over its years of existence. So looking at this stock to flow model, an investment today still has the opportunity, if it continues to follow the stock to flow model, still has the potential to produce some pretty substantial gains. This is Bitcoin's stock to flow model. These models are commonly used to value scarce assets or scarce commodities like gold, silver. So again, it basically takes the total supply, the total available Bitcoin, and divides it by the new supply that comes into the market. In our previous video, we discussed how Bitcoin is created, and we touched on how every 210 blocks, the number of Bitcoins that are awarded for the mining process is cut in half. So every 210 blocks, the new production decreases as the total supply increases, but the new supply coming into the market is decreasing. So that would yield you a larger stock to flow. That blue line represents the stock to flow. The colored dots in this model represents the price of Bitcoin at the end of the day. We can see that Bitcoin has followed this stock to flow model pretty accurately over the years. While the day-to-day, week-to-week price movements of Bitcoin can be pretty volatile, it's followed a pretty predictable pattern over the years. So Bitcoin is typically defined by cycles of bull and bear markets. So you usually have about a year bull market. So the market will run exponentially in price. And then approximately a 3-year bear market. So far, Bitcoin has followed this type of cycle 3 times, where you have exponential price growth, followed by a correction, and then the market kind of consolidates, accumulates, and then recovers to the previous all-time high, and then it continues to move higher. So the first time it did it back in 2011, we saw Bitcoin experience some exponential growth. The price started around 5 cents, and it moved up to highs of close to $20. And then it fell all the way back down to about a couple of dollars. And so it continued to correct and then move back to the previous all-time highs, and then it continued higher. It did it again in 2013, where it experienced all-time highs, new all-time highs, exponential growth, moving from lows of about $12 and moving all the way up to over $1,000. And then it corrected again, moving to as low as a couple of $100. And then we continue to move higher, reestablishing the previous all-time high, and then an exponential growth phase back in 2017, followed by a correction, consolidated the price, and then we just recently reestablished the previous all-time highs, which was about 20,000, and now we're moving higher. So we're currently in the midst of that 1-year bull market. There's no indications that this time will be any different. So based on the stock to flow model, and if Bitcoin's price continues to follow the stock to flow model, we expect this year for the fair market value price of Bitcoin to be just above $100,000. And so typically what happens on that stock to flow model, which is represented by the blue line on the graph, the exponential high typically, well, it has all 3 times in the past shot well above that stock to flow fair value price for Bitcoin. Back in 2017, the fair value price, which is the stock to flow, was around $5,000, $5,500, and it went all the way up to $20,000. Back in 2013, the price was around $100, $120, and it went well above $1,000. Well, about 1,100. I think it got to, it's not real accurate on those dots, but I think it was around $1,200. And then again, back in 2011, it was around $1, and it went all the way up to close to $20. So this bull run, the fair value price is right above $100,000. So again, I expect the price to be somewhere above that price. Where? Not sure. I have my own predictions. I believe that the price would end up being as high as $250,000. But I wouldn't be surprised if it even reached above $500,000 for one Bitcoin. Looking at the price where it is today, we're right under $60,000. If it was to move up to that 250 or 500,000 at 250, you're still almost right at a 5x price appreciation. Going above that to the $500,000 mark, that's almost a 10x price. That's almost a 10x price appreciation. So, is there Is there an opportunity for you to still make money in Bitcoin? Obviously, I believe there is. Is it possible that the stock to flow model doesn't continue to bear out? That's possible. But all the reasons that I gave before, with so much demand coming to the market for Bitcoin, it only strengthens the case for a higher price in Bitcoin. I put some numbers down that I feel are rather conservative, looking at the stock to flow and knowing that Bitcoin has followed this trend and the price movements has followed this trend. I put down some numbers to look at just to see where the price potentially could go if you made a certain dollar investment. So if we invested $2,000 in 2021, and I said the price was around $60. And again, I was being conservative with the numbers. We know how the price overshoots the fair value price on the stock to flow. So this year, it's saying that the price should top out at 100, a little bit above 100,000. So I just put 100,000. So at putting 2,000 in, we're saying the price is 60, and we know that the Bitcoin price corrects every time it reaches the top, and that typical correction is around 70 to 80%. So I'll be conservative with the correction as well, and I'll just say that it only corrects 70%. So if we're at 100, if we reach 100,000, that $2,000 investment at the end of the bull run of 2021, it would yield about $3,300. Or then you would sell because you know that the price is going to correct and bring the price down. If it continues to bear out as it has done in the past, we would expect a Bitcoin price somewhere around 30,000, where you would then buy back in, which would yield you 0.11 Bitcoin. And so in 2025, we can look over here at our stock to flow, look right behind me here. The price reaches 1.3 million. So that 1.3 million, you would sell at the top. That would give you 144,000. And then the market would correct at it, as it's done in the past, down to about $390,000, where you would buy back in. Then you would get 0.37 Bitcoin. And at the end of the next bull run, which would be in 2029, these are approximate dates and numbers. We approximate that the price would be around 3 million. And with that, you would be at a little over $1 million. So in less than 10 years, a $2,000 investment could potentially yield $1 million if this stock to flow model and the trend of the bear and bull cycle continues. Now, before you run off and invest all of your disposable income, you need to be aware of a few things. Your risk tolerance. So you need to understand how you are and how you deal with risk, because the crypto markets can be pretty risky and they're very volatile. And another thing is to understand the movement of Bitcoin. So you can go and open up a historical chart. You can go and open a Bitcoin chart and look at the historical data of Bitcoin. And so the price movements within Bitcoin are pretty volatile. So a 20 to 30% correction in Bitcoin is kind of standard. It happens quite a bit, especially in these bull markets, because the price, it runs up so high. It never goes straight up. So it needs to come down and kind of build a base and build a higher base to support those higher price movements. And so be aware of those things before you do get involved, so you don't panic and sell at a loss. So that concludes the series on what is Bitcoin. If you have any questions about Bitcoin, please don't hesitate. Holla at your boy. I do not mind helping people out in this space. And come back and join me next time, where we'll discuss DeFi, short for decentralized finance, and how it's disrupting the traditional financial markets.
For more of this content, go ahead and smash that like button, subscribe, and turn on those notifications.